Okay, good. Let's hope that I'm recording the right window. Okay, well, welcome everybody to the first Pipnotic Symposium. Get Jacko in here. This is the first one of many, I think, and I'm going to stop doing the weekly trade examples because I feel that a live session is much more beneficial for everybody. So if everyone can participate live and ask questions, and I think everyone can get their answers a lot quicker, and so everyone's happy. So I think we'll do that. Okay, I just made a couple of slides here just so we can see what's going on. Can everyone see the slides now? Should be clear. Yes, brilliant, good stuff. Okay, so today we are going to have a look at primarily the software, and afterwards we'll have a rundown of an analysis. So we'll do a top-down analysis on a few pairs, maybe just one pair, just so you can get a little bit of an insight into how we'll use the tools to do this. And sometimes I'll be using strength information, other times I won't, but I'll always be using supply and demand information because I find this to be very, very important. And I do talk a lot about both the currency strength and the supply and demand, but for discretionary trading, I use the supply and demand for my entries, and I use the longer-term strength information to give me, maybe to help me qualify which currencies I should be trading with others. But also I use currency strength information for trade management, and I'll show you how I do this because it's very, very interesting and very powerful. Okay, so the agenda for today, we're going to have a look at the software, and we're going to do a top-down analysis, and then we'll have a bit of time for some Q&A. So if anyone has any questions, and we can address those at the end here. And I think that maybe we'll go on for maybe 45 minutes to 1 hour, depending on how many questions everyone has. Okay. Okay, so if we first of all have a look at the currency strength software. I mean, some of the users have, some of the members have been using the currency strength software for well over a year now, almost 2 years, and so it's been around for a long time. And currency strength can be used for many things, and it can also be very confusing. And so I think if you just throw it onto your chart and you look at it and you try to make sense of it, it'll probably end up confusing you more than it's going to be useful to you. And so I think it's important that we have a closer look at how we can use it for entries, but also trade management as well. And currently at Pipnotic we have two versions. We have the graphical version, which shows us all the lines, the colored lines that I think most of you are familiar with. But we also have the text version, which I recently just released, and this version is showing you a lot more information, so that you're not necessarily having to click through different time frames. So I'm just going to bring over my chart, and we'll have a look at one. Let's see if we can find. I think I've got it on here somewhere. Maybe not. Okay, let me put it on there. Okay, so here we have this. You know, I'm just gonna log on to a different account because I know I have some historical data. Because every time you log on to a new account, it has to download the historical data for that account. A little bit silly, but I'm sure there was a reason for that when they made it. Okay, good. So now we can see what's going on. Okay, now I'm going to put on a configuration here. We'll use let's say the day trading configuration. We'll start off with the GFX version. And just to bring at the top of the currency strength while this loads, currency strength. I mean, I've made this algorithmic trading robot that uses currency strength exclusively for entries, and it's very powerful in that it's qualifying trades based on strong and weak currencies. So it's pairing the currencies based on their strength in relation to one another. And so while in one chart it can the dollar can be seem to be strong, on another chart it can seem to be weak. And so when you consider currency strength, you have to remember it's a relative currency strength. So one currency strength relative to another. What's going on here? bring up another platform. This one seems to be misbehaving. Oh, there it is. Okay, there it is. Okay, that took a minute. Okay, so if we have a quick look at this, you can see that we have bunch of lines just up here. I mean, what do we use these lines for? Well, currently in this configuration, I'm looking at, we have longer term strength information here, we have medium term, and we have short term. Because if we consider a price chart for a minute, according to the way that that I like to trade, and I encourage people to trade, we have long term, medium term, and short term, or entry time frame information that we look at. We don't need to look at all of the time frames, but we need to know what's going on the longer term, the shorter term, and then somewhere in between. And so here we have the long term, the medium term, and the short term. And initially, I mean, if you click this on the chart and you have a look at it, it looks quite confusing, and it is quite confusing. And so unless you interpret this information correctly, it's probably not going to add a whole lot of value to your trading. It's probably going to get you into trouble, because you can see here that, for example, we have the Swiss franc, which is strong, which is a lime green line. Then we have the orange one here, which is Australian dollar, and that's weak. And so you can see, for example, if we were to sell this currency pair, let's bring this up here quickly. The Aussie dollar, Swiss franc, there's a lot there. Here. So this should be moving lower. And you can see, rightfully so, it seems to be moving low. We're respecting this 4-hour trend line. You can see it's blue. So this tells us pretty much what's going on. So if we look at the configuration on this one up here, you can see that we are looking at 120. The look back is set to 120. The static enable static period is set to true, which tells the indicator to look at the static period. So now we're looking at 120 hours. So this is a week. So this is showing us the strength information for the currencies over the course of the past week. And you can see here that if we look at the American dollar, which is the green color, the normal green color, you can see it's slowly moving lower. So over the course of the past week, the American dollar has been selling off. If you look at the magenta line here, you can see that the Canadian dollar, which is a magenta line, has been picking up in strength. And this is over the longer term, and this is really nice to know, because ideally you want to be looking at currencies that are over the white line and getting stronger, and you pair those with currencies that are below the white line and getting weaker. And you can see here that we have the Australian dollar, which is the orange line, and the Swiss franc, which is the green. This is the longer term. And you can see here on the medium term, we have the same thing, the same story being told. And down here on the short term, we have the same story being told. But if we look at the shorter term here, we are looking at the past 60 minutes. So this is the development of the currency strength over the course of the past 60 minutes, or 1 hour. And for the medium term, we are looking at the past 24 hours just here. And so this is really interesting to us. And so what we want to do is you want to trade in line with the longer term. You don't want to trade in line with the short term or even the medium term. And why is this the case? Well, this is important because if you sell the Australian dollar, Swiss franc, now price could very well be looking to pull back, because when price splits like this, you'll often find that price will come back in because it's sometimes overextended. And there are some levels, different levels of strength information here, or different levels, that if price manages to get to those levels, it'll often feed back, it'll rather return to the mean before it continues on its trend that follows the direction of the longer term. So you want to look for the really nice strength readings on the longer term and use these for the shorter term. And so for this particular trading strategy, this is the day trade, so the shorter term, you would want to look to sell the Australian dollar, Swiss franc at areas of supply. And so we will not be buying this pair at all. That's according to the strength information, that's off limits. And so let's drag this over here. We'll drag it over to the medium term and the short term. And after we've done that, then we can modify the setting here. There's something called display active currencies only. We'll set that to true on all three of these. And so now it's only showing us the currencies that make up the pair that we're currently interested in, which is the Australian dollar, the Swiss franc. And we'll do that as well here for the shorter term, like that. So now we can see just these two currencies in relation to one another. And if we zoom out, you can see that the Swiss franc has indeed been stronger for quite a long period of time since the beginning of November. And so if we go here, we go to the daily chart, you can see that how price has started to sell off here. You can see here that the Swiss franc kind of moved in, so it started to pick up in strength, and the Australian dollar, it started to lose strength, and the Australian dollar started to pick up in strength. So you'll see the currency pair show exactly this. So there'll be some kind of a pullback on a move lower. And if we have a look at where this occurred, if we have a look just here, this is the beginning of December. We got up here, where's the beginning of December? It's around here, and you can see that this is precisely where price started to move higher. So the Australian dollar was moving higher, and the Swiss franc was moving lower. Australian dollar is moving higher, and the Swiss franc is moving lower, just here. So this little subtle movement, these lines moving in towards each other, is very clear, and you can see it on the price chart here. And so just be aware of this. So when this happens, then you want to be a little bit careful. But when you see something like this, or something like this, where these lines are moving away from each other, then of course this is a very clear sign to be selling that currency pair. Okay, and so the rule of thumb, trade with the longer term currency strength. Okay, and I'm going to quickly run through the configuration options for this indicator, because I think it's pretty important, and I want everyone to kind of be up to speed with regards to what this software is actually doing. And so, I mean, it operates in three different modes. We have the default mode is the look back equals look back setting. And so the look back can be set to the look back setting, which is the setting that you can see here. So the value that you specify in this configuration option. We have the look back setting equals the session open, which tells the indicator to look at the session information, which is just here. Then you have the look back setting equals the period open, which looks at the period open look back. And so for the look back setting, which is its current situation, the current configuration, if enable static period is set to false, then the indicator will look at the time frame that the chart is currently on. So now we are on the 4-hour chart. So now the indicator is looking at 120 4-hour periods. If you go to the hourly chart, it's looking at 120 hours. But if we change this to static period to true, we set the static period to, let's say, 1 hour, we'll leave it on the default. No matter what you click on, it's not going to change anything. You can see that the price information is the same. And this I've added as a security feature so that you are certain that you're looking at the valid, the correct information according to your trading plan. And this is something I like to set, because if I want to ensure that I'm looking at the past week of hourly data, I want to make sure it's not the past 124-hour period or 120 days, because this will, of course, throw everything off course. And then we have the session open configuration option, and this tells the indicator to look at the information that we have specified here. And because my broker is currently closed, this won't make a whole lot of sense. But if you set this to true, it's not going to look at the look back setting anymore. It's going to look at the times that you specify here, and it's going to calculate the number of periods since the beginning of the session. And ideally you want to put the enable static period on true, and the static period you want to put on 1 minute. And then this will enable you to look at currency strength in minutes since the beginning of the Asian session, since the beginning of the Asian Open, and once the European session opens, since the beginning of the European Open, and when American session opens, it'll start showing you strength information in relation to the currencies since the open of the North American session. So it's important that these times are correct. And these are simply values that you get from your market watch window here. And these are going to be offsets of GMT. And for my broker, I think I'm GMT +4. So we have a look here for GMT +2, where we have the European Open, which is the London Open. This is when London opens, and it's set to 10 o'clock. So when it says 10 o'clock up here in the market watch window, this is 8 o'clock London time. So when London town starts going, I want to be able to see early developments in which currencies are being bought and which currencies are being sold since the beginning of the London session. And the London session is really good for this because you can, if you look at shorter term trades, then you can spot very, very early on in the trading session which currencies are being bought and which ones are being sold. And so experiment a little bit with that and go back and have a look at the videos that I've made on that in the on the Pipnotic website and have a look at that. It's very, very interesting to see what these currencies are doing in relation to each other at the beginning of each session. Okay, and then we have the last one, which is a period open, and this tells us, but then we're asking it to show us what the currencies are doing in relation to one another since the beginning of the past day. You can see here we have D1, but you can also say show me what the currencies have been doing since the beginning of the past month or week or day or whatever. But now we're on the 2nd. We're on the 2nd of January 2017, and so there's only going to be 2 days of price data to look at, and there won't even be that because the markets were closed when we changed the new weekend. So there's actually this configuration option here, the period open, won't really make a whole lot of sense if it's on the bigger time frames. But if you say, for example, the period open look back, we want to show us what's going over the past day, then it'll show us the development of the currencies in relation to one another since today opened. So since 1 minute past midnight local broker time, because then we're going to start seeing the market trading, and then we're going to see the currencies beginning to merge to either towards or diverge away from one another. So those are the 3 settings that we have here. And then we have something down here, and this is in relation to the session open look back mode, and this is minutes into a session, and this one here is related to the one just above, the enabled session line. And I wrote an article. Let me get the article out here so you can see it, that focuses on the London Open. Let me get the article here so I can show it to you. And it's some research I did in relation to when the London session opens. And so let me have a quick look. So there's a very clear pattern that I was noticing that the currencies were doing at the open of the London session. And I have that article just here, and you can see it. It's called the European Session Trading the London Open. And I found out that, where was it? Yeah, there's a small rundown of what goes on in the morning. So like when a trader comes to work, hi there, Martin, just going to let another member in. When the trading session opens, people aren't working as soon as they get there. First of all, I mean the traders, the institutional traders will have to get to work. So they'll be bicycling or driving to work. Then they have a morning routine, getting coffee and stuff. At 10 minutes past 8, they're sitting down. They start looking in their books to see which orders they have to fill, but they won't be filling orders then. It's first a little bit later that this starts to happen. And I found, if you read on the article, you can see that I think the time that I found to be most active, so like the minute that you see on the clock when the sessions really start to take off, was after about 20 minutes past 8 GMT local London time. So at 20 minutes past 8 London time, this is when you start seeing these lines moving away from each other if you have this set to the session open. And this is interesting because before that time, let's say that you're looking at the strength information at 7:30 in the morning. You have to remember that due to the fact that the retail FX market is a very, very decentralized market, we don't really have any valid liquidity or volume readings, and so we can only assess the depth of the market or the thickness of the liquidity, the greatness of the volume, by looking at the time of day. And London is the session, the European session is the session that contains the most liquidity, and so you know that from 20 minutes past 8 in the morning, then London is going at full speed. And so now this is where you have the big moves happening. And so if you're trading before that, liquidity is thin, and so a lot of the moves that you think are going to continue either higher or lower are probably going to be false breakouts. But when price decides on a direction after 20 minutes past 8 o'clock GMT time, then you know that there is a higher likelihood of these moves continuing long enough for you to get the risk out. And so that's a really interesting read, and it was very interesting to do this research. And I spend a lot of my time sitting in banks doing security work, and I spoke with a few of the traders, and I know that, and I asked them what they did, what time they get to work. And of course, this is in Denmark, but I mean the same applies for the sessions, the traders in London and so forth. And so really interesting. So I recommend that you have a look at that. It's a pretty interesting article. So that's pretty much the different sessions. Sorry, to get back to this, the enable session line, when this is set to true, it'll set a vertical line on the chart like so, and it'll show you when it is 15 minutes past the hour, or according to my research, 20 minutes past the hour. And if you put this on the minute chart here, when 20 minutes past the hour occurs, then it's going to draw a vertical line, and then you'll be able to see visually the threshold from the low volume to the high volume. And so when currencies start to diverge after the vertical line, then there's a high likelihood of these currencies continuing to diverge and move away from each other. So this is just a pretty nice setting that I put there. Yes, and then we have a bunch of settings regarding the colors. I've tried to make the colors as obvious as possible. I mean, we have Euro, which is a blue, it's like the European flag, USD, the greenback, the British pound, red. If you look at the flag, there's a lot of red on it, kind of. And then we have some other ones that are a little bit difficult. Here we have New Zealand, which is brown. In New Zealand, they have a lot of cows. Cows live in fields. Fields are made of soil. Soil is brown. And then we have some mining, gold in Australia. And then the Japanese yen, these are kind of the colors that were left over. So I distribute them evenly. We've got CAD, got magenta, but that's pretty much it. Then you can also say here that, for example, I don't want to see the Swiss franc, I don't want to see the British pound, and I don't want to see the Japanese yen. So you go like that, and those lines, oops, I think I put it on the wrong setting. Then these lines are going to disappear from those that we specified in the configuration. There we are. So now you can see that those three currencies are no longer visible in the selection here. So if you trade, for example, the euro, the American dollar, and the British pound only, then you can simply say, well, I only want to see the euro, the American dollar, and the British pound, and the rest I want to switch off. You can just turn all these off, like so. And then you're only viewing those, which is quite nice. Then you can focus on those. Then you can say, okay, how is the euro in relation to the British pound or in relation to the American dollar? And this just helps you make better trading decisions, and you're not seeing all the clutter that other configurations may kind of present to you. So that's the graphics or the GFX version of the indicator. Does anyone have any questions about this particular version of the indicator, the GFX, the one that draws the squiggly lines? And if you do, then we can take them now, but we can also take them at the end. Hi, Jacko. Good to see you here, and Martin Schultz, and Robert. Excellent. Okay. Okay, good. So now I'm going to have a look at another version of the indicator. We'll just put this single on. This is going to show me a chart, and I'm going to attach this to the chart, and then we can have a closer look at that. things are a bit slow when the broker's not doing business. I think we'll manage. There we are. Okay. Okay, then we have the other version, which is a text version. And in contrast to the other version, you have the longer term, the medium term, and the short term. Here we have different information. And the information here is very profound in that it's showing you a lot of strength information. So here you can see that we have active, and here we have the American dollar and the British pound. You can see these two here. And this shows us the currency pair that we're looking at. So we have the American dollar, British pound across. And you can see here that there's a number 2 next to the GBP, and we have a number 3 on the USD. What does this mean? Well, this tells us that the British pound is the second strongest currency out of these 8 for this time frame. And this time frame is the 30-minute chart. So if we go to the 30-minute chart, you can see that we add the color white to the row here, so you can see that which time frame we're currently looking at. You can see we have the British pound, which is the second strongest, the American dollar, which is the third strongest. And if we look at the red colors, we have number 8. This is the 8th weakest currency. This is actually the weakest currency out of all 8 of them on the 30-minute chart. Let me remove some of these lines like that. And the New Zealand dollar is the second weakest. So if we put on the Australian dollar, Swiss franc, this is going to show, this pair should be moving down pretty quickly. So we'll drag that over. And you can see we've had a big cut off. So price really cut lower there. So this is showing us very clearly what's going on. But you can also see that the Australian dollar is actually the weakest or the second weakest all the way up to the monthly chart. So it might be looking good to position yourself short on the Australian dollar. But if you're trading big positions, be mindful of the fact that you're probably going to be pairing the Australian dollar with another currency, and you're going to get negative swaps. You're going to be paying interest each time the clocks tick midnight. So just be careful of that. On big accounts, then it can be quite expensive. But across the board, you can see here that the Australian dollar is weak, and the Swiss franc is also looking pretty good here. You can see it's the strongest on the weekly, on the daily, on the 4-hour, the 4th strongest, and the 1 hour and the half an hour, it's looking pretty strong. So this is actually a really good pair to sell at the moment. And you can see how the configuration is currently in the position mode. And what does that mean? Well, that means that if we go to the configuration here, we have a few different modes. We have position, which tells the indicator to look at the more profound time frame. So it's going to move up to the deeper end of the time frames. So starting with the monthly, and it's going to go down to the smaller ones. And there's a setting here called periods to show, and this is going to be 6. So when it's on position, it's going to look at the monthly chart as the one furthest to the left, and it's going to show 6 time frames to the left. So it's going to go show the monthly, the weekly, the daily, the 4-hour, the 1 hour, and the half hour. So monthly, weekly, daily, 4-hour, 1 hour, and half an hour. But if we change this to, for example, 3, then it's going to show us the monthly, weekly, and the daily. And if you hold the mouse over the letters here, you can see monthly, which you can see at the longest line at the top. It says MN in parentheses. Here we have weekly, and then here we have daily. So this just enables you to kind of fine-tune what you're seeing here. But I like to have it on about 5. I think this is pretty good, 5 or 6. But if you want to see shorter time frames, then you can put it on, for example, the scalp, and if you press enter, well, then we're going to see some pretty quick moving currency strength information. So if you hold the mouse over here, this is showing us 5-minute strength information. We can see the Swiss franc is the strongest, the Australian dollar is still the weakest, and so this is looking pretty good here to be selling this currency pair. And you can see that it is also coloring some of these currencies white. So we have the green ones, the strong ones, we have the red ones, which are the weak ones, then we have the white ones. And the white ones are simply showing you which time frame you're currently on. So we are on the 30-minute chart. So this is the 30-minute strength information. If you click onto the 1 hour, it's going to show the hourly strength information. If you go to the 4 hour, it's going to show us 4 hour strength information like that. So just to kind of help you be mindful of what it is that you're looking at. Okay. Okay, so now we have another setting, which is the look back. And look back simply tells the indicator to show you currency strength now relative to currency strength 1 period ago, 2 periods ago, 3, 5, 8, 13, 21, 34. So it's nothing too fancy, but you'll find that if you use the values that are kind of the smaller values, so 1, 2, 3, you'll find that these will change an awful lot. These will be changing a lot more frequently. But if you put them to, for example, 8 or 13 or 21, then you'll find that these will slow down a little bit. And that's because the information it'll be a lot more profound on the when the look backs are a little bit higher. When you go, if you put it on 233, you'll probably find it's too much. If you put it on 1, you'll find it's too little. But via my algorithmic trading projects, I found that between 3 and 21, there are normally pretty good areas. The 3 being the quicker of those, and the 21 being the slower. So if you position it somewhere in between, I think that you'll find you'll do fine. Volker from Germany is helping me out a lot with this, and he's found that I think it was 5 or 8 that you found. Which one was it, Volker, that you found to be most beneficial for your trading? And Volker trades shorter term, so he's looking at the 8. Okay, he's put it on 8, so he uses the 8 period look back, and he's trading short term. So he's looking at the 1 minute, 5 minute, 50 minute, half an hour, and 1 hour most of the time. So he likes to see price when it's kind of the bleeding edge development of price, and that's his preferred setting. So just play around a little bit with that and see how you get on. Then we have this one here. This is like the current period text color. This simply shows us the current period color, which is white. Dashboard text color, this is the other color. That's pretty much it. And then you'll experience, some people have written to me saying the indicator is doing nothing, it's just showing all currencies and they're all green. What does this mean? Well, this means that the symbol prefix and postfix have not been set. And what do I mean by this? If we have a look at my platform, I'm using IC Markets, you can see that my symbols start and end with the currency pairs and nothing else. But you might also experience a broker that does something else. I know that there are a couple of brokers that like to have their symbols look like this. For example, they might have Euro USD, and they have a .ECN if you're using their straight through processing network. And so what does this do? Or how does this affect the configuration? Well, this means that for the symbols, we're going to have a postfix, and the postfix is going to be full stop ECN. And so you're going to have to put that in there before. And if there's something before, so for example, there's a P at the beginning of the symbol, then you're going to have to put P here like so. And I've made a new version of this, and it's pretty good at figuring this out automatically, but it's just for the time being, until I've released that version, just have a quick look. And if you're seeing all green or all one-colored readings here, then you're probably missing the postfix or the prefix. And if you're not, if this is set and you're still viewing values down here that are wrong, either green or things aren't changing, then your platform is currently downloading the historical data that is required in order to calculate these values. And so just be a little bit patient. When you run the currency strength indicators, both the graphics but also the text versions, you'll find that for the first time you run it, things are going to be a little bit slow. The lines are going to be flat and around the 0 line, and eventually you'll see them start to spread and show a little bit more detail. But you're going to have to wait until the platform manages to download the historical price data for all 28 currency pairs, which is required. So just be a little bit careful of that. Just be patient if it's the first time you're running it. But when things are looking good and the indicator has enough data to in order to perform calculations, and it'll look like this, and everything should be fine. And I've tried it on maybe 10 different platforms, and it works just fine. Good. Okay, well, I think I'll leave it at that. So we have the GFX version and the text version. I'm not sure what version you want to use, but just try them out and see how you get on. I'm gravitating more to this version here because it just really gives me like a really quick overview of what's going on. You can just see here, boom, green. Your eye just jumps to the green and to the red. Good, so you want to be buying the pound and the franc, and you want to be selling the Kiwi and the Aussie. And it's really quick, very intuitive. You don't have to look and interpret the angle of the lines or anything. Just look at this and it gives you like a pretty good indication. Yeah, and again, if you want to focus on the longer term strength, then focus on what's going on more to the left and work your way down. Because if you have a red Aussie over here, but it's green here, it just means that longer term we're selling the Aussie, but on the shorter term we're having a pullback. And so you'll see this very clearly in the currency strength indicator. Good. Okay. So does anyone have any questions about that? Or is that as clear as mud? Okay. Super duper. Let me get up the... Okay, Volker is... Oh, good. Good, Volker. Pleased to hear. Okay, let's have a look here. So now we're going to go on to the next one, which is a supply and demand. And this is kind of this is the fundamental tool that we will use for all trading. And you'll notice sometimes that when we do a top-down analysis, I will do my supply and demand analysis first, and then I will do my currency strength analysis afterwards. And sometimes I won't do the currency strength analysis. I will only do the supply and demand. This is because currency strength is not as powerful as supply and demand. Supply and demand is king. Currency strength it's a marvelous and incredibly powerful trade management tool. Okay, so let's have a look at this. We're going to remove this. So we have the currency strength. Sorry, the supply and demand. Okay, so supply and demand tool is great, and I've been working on this tool in different forms for a very long time, actually since the beginning of 2010, and it's changed over the course of the years. It used to be in a tool called the Price Action Pro, which was like a hugely extensive tool for price action, which did everything. But I felt that it was almost too much. It would do a bunch of Fibonacci calculations, and it would draw Fibonacci lines and linear regressions, and it was doing pivots and all sorts of stuff. And then it did this supply and demand. And I found via testing over so many years that supply and demand is simply the number one thing that I wanted to focus on, which is why I slowly started to phase out all the other stuff. This was the good stuff. And so this is actually kind of the engine that I pulled out of the Price Action Pro, and I put it in its own independent indicator. Okay. Good. So the beginning of every month, the product key will change. And in order to get the latest product key, then you have to go to the members section, and you go to the license here, the license menu, and then you will see the product key here, which is valid for the current month. And so January 2017, this is the one that we should be using here. And if your platform isn't working, then this could very well likely be the reason why. Okay, and then we have some other stuff here. I won't go into depth out of everything, but we have some relatively new modifications that enable you to move the dashboard. So if, for example, if you have the dashboard up here and price is really close to this and it looks a little bit cluttered, then you have the opportunity to move it away. So you can move it out to the bottom right or the bottom left. I like the bottom left here because bleeding edge price is always on the right side of my chart, so I like to keep it there. You can also change the size and the colors and all that stuff, but the most important part of the functionality here is kind of in the middle of the configuration options here. And we have these, the enable supply and demand levels. And when this is set to true, the indicator is going to look at this setting here, which is a greater period multipliers, and it's going to use these to tell it on what time frames to calculate supply and demand. And so, I mean, what does 1, 2, 3 mean? Well, this tells the indicator that we are going to be looking, let me start on a simple example, 0. When it's set to 0, the indicator is going to calculate supply and demand on the currently active time frame. So it's going to be looking on the daily chart. If I'm on the daily chart, it's going to be looking at 4 hours supply and demand. If I'm on the 4-hour chart, it's going to be looking at 1 hour if I'm on the 1-hour chart. But if I set this to, for example, a 1, greater period multipliers, and I set this to 0, 1, I do this, then it's going to add other lines. It's going to add these red ones, and these are actually daily levels. So it's looking at the currently active chart, which is the currently active plus 0, which is the currently active. Then it's going to go to the currently active plus 1, which is the daily. And so for each additional value you add here, 0, 1, 2, 3, it's going to show you the current plus 1, the current plus 2, and the current plus 3. And just be aware of the fact that the more you put on here, the more numbers and calculations the indicator is going to have to perform. And so I think you'll find that it'll really slow down if you turn this up too much. And I like to normally keep it on, I like to have the greater period multipliers on 1, 2, 3. Then it's showing me the current plus 1, plus 2, and plus 3. So I'm on the hourly chart, and I can see 4-hour, daily and weekly. So this is just a really nice way to prevent clutter. Okay, but you can see that I have positive numbers here, but you can also look at negative numbers, and this is really, really interesting, because if you look at a price structure like this one here, you can see we have a long pin there. What's going on here? Is it just a pin? Absolutely not. If you look inside this wick, you'll find that there's micro supply and demand all over the place in here. There'll be some down here. There'll probably be some around here. There's definitely some right here, which is where price reacted. So price reacted at micro demand inside this wick. And so I've made the indicator so that you can set this to a negative number as well. So you can go -2, for example, and you can see here that, a little bit difficult to see, but you can see that in this body here, it's drawn a 15-minute area of supply inside this body. Well, that's because that we have an area of micro supply inside this hourly candle. So this is a 15-minute area of supply. Why 15? Because we have the current period -1, -2, which brings us down to the 50-minute. And if you're unclear what the line is, you can either reference the colors of them, or you can hold the mouse over that, and you can see there it says Pipnotic SD supply demand M15. So the M15 tells you on which time frame it was calculated. And this is really good if you're looking at price. It's really wicky. Like you have a big wick here. We have some smaller wicks here, and we have another one here. So it's just a pretty good way to dissect these areas that are a little bit unclear. So that's what I also like to do. But normally I'll do the micro supply and demand analysis manually, just for practice. Good. Then we have this setting, supply and demand significance. Okay, if we'll just look at this setting for now. Let's find another pair that's looking. That's better. That's a nice, clearer pair. If you can look here and you can see that we have a line here, 4-hour level. We have another one here, supply. We have demand here at the bottom, and these have a significance of 6 here. And what does that mean? Well, that means that the indicator is qualifying these areas of supply and demand, and it does not want to see price challenge these areas for 6 periods to the left and 6 periods to the right. And so that is very important, because when the number increases you'll see the significance of the area go up. And so the higher the number, the fewer numbers of supply and demand. The smaller the number, the greater the number of levels. So if we put this on 2, for example, you'll see that all of a sudden we'll see a huge increase in the number. You can see that we had a bunch more show up here. We had one that disappeared here because it was violated by this one. We had this one here that is all of a sudden show up. You can see price, it was established, it was tested once, tested twice, and you can set this value to a small value like 2 or 3, but it requires that you are perhaps a little bit more skilled in visually identifying the areas so that you can remove the false positives should there be any. So I recommend leaving it on 5 or 6, and as you feel more comfortable with it, then you can reduce it to 3 or put it down to 2 or whatever you like, or you can remove it entirely once you're completely comfortable with the notion of supply and demand. But I like to keep it on 6, and this gives me just a really good indication of the greater period areas of supply and demand. This is where the good stuff is. Okay. Then we have this one here, which is the enable round number levels. When you set this to true, it shows me round numbers. So these are going to be multiples of 20 pips on the hourly chart. On the 4-hour chart, they're going to be multiples of 50 pips. So we're going to see here we have the 7350, here we have the 7400, 7450. So these are good because they're showing you where areas of supply and demand overlap with the psychological numbers. And here we have a daily area of supply that lines up with a round number, 7400 area. So when price comes here, we're probably going to have a pretty good reaction for those 2 reasons, supply and a psychological area. Okay, Volker is asking, would you agree that going to more lower time frames, I may need a higher significance? Yes, I certainly would. So if you want to go on, for example, the 1 minute or the 5 minute, then you're probably going to turn this up to like 20, 30 or even 40, 50. But I'd play a little bit around with that. I've done some testing, and I found that on the 1 minute chart, if you put it up to at least 20, maybe closer to 40 or 50, then you'll find that the indicator is finding good levels even on the 1 minute chart. But again, if they're validated with a significance of 50 on the 1 minute chart, then they're probably going to be 1 hour and 4 hour levels qualified with a smaller significance. And so then you'll kind of see eventually where these levels will start to overlap. So the higher significance on the small time frame, lower significance on the bigger time frame, if that makes sense. Okay, so let me turn these off. We have those like that. And then we have another one. We have this one here, this is important. We have supply and demand bar count. What does this do? Well, this tells us about the number of bars that the indicator should use when performing the analysis. When it's set to 0, the indicator is going to look at the number of bars that it can see on a chart. And so if we scroll a little bit to the right, you can see that the analysis stops here. You can see you can just see as many candles that are visible in the chart. So we go back and forth, you can see that it'll stop just here. So if you go a little bit further, it stops there. But if you want to ensure that you're seeing a lot, so you're seeing the areas of supply and demand that are qualified, let's say 500 periods ago or 1,000 periods ago, then you can simply set this to, for example, 1,000, and then it's going to show you areas of supply and demand and accumulation as far back as 1,000 periods. And you can see here it continues to draw. And this is the 1,000th bar just here, or in the vicinity of the 1,000th bar. So if you're not viewing, if you're not seeing enough data, then you can simply modify that. But another little trick is that you can put it to 0, and you can zoom out all the way, then you can click on another time frame, and then back, and then you can see that we're seeing all the way back here. Then you can do this for a very quick analysis. So then you can zoom in again and do your analysis and look for the areas of supply and demand that are projected to where price currently is. And there's a pretty good idea, a pretty good likelihood that these are qualified way back. This is like a little trick there. Okay, good. And then we have the trend line management, and we have the rectangle management. And so I want the indicator to show me trend lines because these are essential for the way I like to trade. And I'm going to go over this theory because it's quite important. So, I mean, how can you qualify an area of supply and demand? Well, it can be qualified in one of two ways. Normally, you want to see price move higher like so. When price moves higher like that, we have 2 points. We have, first of all, we take the two most recent qualified swing points. And when I say qualified, what do I mean? When I say qualified, I mean that for this to be used as a swing point, when price leaves this swing low, it must move above this swing high. Did it do that? It certainly did. And so this is swing point 1. Price went up, it went down. Is this swing point 2? It was as soon as price moved above this high. So now it's 2. So now we can draw a trend line that looks like that. And the trend line is interesting for us because it enables us to define the structure of price historically. So you can see that price is moving higher. We expect price to move down and expect it to respect this level, and we expect it to move higher again, like so. But it might not. It might also move through the trend line and break the trend line, and this is what we want to see. You can trade you can trade tests of the trend line if they line up with demand over here, but I wouldn't trade them. I don't trade them blindly. I want to see the intersection of where price lines up with the trend line with an area of supply. So I want to see, for example, an area of micro supply in here, demand in here, or I want to see price come a little bit deeper and test something up here. So we're testing this resistance, so resistance becomes support, and I want those to overlap with the intersection at which price meets the trend line. But what we can also do is we can wait for price to do this. We can wait for price to then break the trend line. It breaks the trend line, and this is great because now once price breaks the trend line, then we have qualified the area of supply that broke the trend line. And the area of supply that broke the trend line is this one here. This area of supply broke the trend line. And then you have to get into the whole parent-child relationship. We have the parent, which is here. We have the child, which is here. And what does that mean? Well, that means that the parent is the more significant of the two because this is the one that is the highest. And so you can see that price went down. It tested the bottom of the parent, and then it went down. In most cases, when the areas of supply and demand, that was nice English, children and parents, when they're close to each other, price will often come back to the parent before it continues lower. So if price does something like this, it goes up like that, it goes down, then it comes up, it moves down again like that, and we have an area in here that might look like that, but we also have the parent, which is up here. And typically, this area right here where I put this dot, this will often test the bottom of the parent. And so you can trade this, but the better trade would be to trade the parent, a retest of the parent, like so. And this is because you have better protection for your stop. Because if you want to trade the bottom here, assuming that you get in at this low here, your stop would be over here, over the swing high. But price has already been back to this level here. And so the best part about trading the parents is that you can put your stop in uncharted waters, like in these thick pockets of liquidity that are cascaded above the highs and below the lows. And so we have huge pockets of liquidity here that will likely hold price and prevent it from moving higher. In contrast to these ones here, where we have thin liquidity, which is just on the upside, just above these the swing highs just above the highs of these children. So I almost always only take parents unless there's a super attractive area of supply and demand that consumed opposing supply or demand. And so this is just something I like to pay attention to. So if you see a child, have a quick look at the parent and make sure that it's, ensure that it's a good trade, or make sure, rather qualify that it isn't before you take, before you reject it. If you look at this one here, this is a good one. You can see here we have two continuation patterns. We have, I'm going to use the indicator to do this. It's going to be a little bit clearer. It's a bit messy here. I'm going to zoom in a little as well. So we have, you know what, I'm going to wait till afterwards because I'm getting off track here. We're focusing on the trend line. So sorry about that. So the trend line helps us qualify areas of supply that are qualified due to their breaking of a trend line, which is why I drew up here. And these are really good. You can see that we had this low here, we had this low here, and this one is not properly qualified because when price left here, it did not move above this high, but the indicator is bringing these to our attention as soon as possible so that we can use our own discretion at qualifying these areas of supply. In this case, supply. And so, and so I like to keep them like that. I like to see kind of bleeding price information, which is why I've enabled them to also be drawn even when the swing points are not completely qualified according to the procedure that we like to use. Good, but these are pretty good. Then they'll update all the time. Here we have a downward sloping trend line, and another really good way of qualifying, using them is to help you to find the trend. I mean, when you look at a price chart, a very important question you have to know the answer to before you either buy or sell is price moving up or is it moving down? And if you can't answer this question, you don't know if you should be buying or if you should be selling. So this is paramount that you are able to answer this question. And the trend line helps you do that, because you can, until price broke below this trend line, it was in an uptrend. We had a low, we had a high, we had a higher low, and we had a higher high. And so we had demand being respected and supply being consumed by the demand. Now price broke the trend line, which qualified this area of supply as supply, and now we actually have a downtrend. And why do we have a downtrend? Well, that's because we can manually draw a downward sloping trend line from this high to this high, like so. So we have our first point, which is here. We have our second point here. We have our low, and the low was taken out by the supply just up here. So now we have a downward sloping trend line. But until price moves below this low, we're not in a downtrend. So assuming that this candle here and this candle here and this candle here do not exist, we would be in a bullish consolidation. So we do not have downward, we don't have bearish order flows, we have a pause from the bullish order flows. At the point that we can draw a downward sloping trend line, then we have our downtrend. So now we should start to sell. We should look to sell. On the weekly chart, we could, on a 5-minute chart, have a very strong uptrend. And so this is, all of this stuff, the qualification of supply and demand, is all time frame centric. So demand on a monthly chart may be supply on a daily chart. And so daily demand is daily demand and nothing else. And so you trade it as daily demand and nothing else. Okay, let me delete these. Good. And so the indicator is just drawing these for us, which is nice. And it gives us a very good visual indication of what's going on. You can see here, we have a downward sloping trend line, so an upward sloping trend line that has been broken, which qualifies this area up here as supply. And this brings us to our next setting in the indicator, which is the trend lines, the rectangles, excuse me. And this is a nice feature that I added, which enables us to draw rectangles like so. And you refresh like that. And so now, based on our risk configuration, on this chart, for this account, I'm risking 0.1% of my account. So if I suffer a loss, if I take a full stop loss, if I take a full hit, then I will lose 0.1% on this account. And according to these parameters, I'm able to risk 9 microlots if my stop is 192 pips, which it'll have to be if I want to trade this weekly area of supply. Yes, so that's that. It's a really, really handy tool. And if I want to trade 1% of my account, of this account, then I'm allowed to trade 0.9, so just under 1 lot. Yeah, that's what I'll lose. So it's just a really, really handy tool. And so what I normally do is that I'll draw, for example, the weekly area, then I'll go to the hourly, and I'll look for areas that are embedded within the weekly area. Then you can see we have the daily area just up here, like so. Then you can go to an even smaller time frame and you can refine your entry even more. And this will enable you to really refine your entries as you can drill down into the area of supply that actually the price actually moved away from. And you can see that it was actually a 1 hour area of supply the price broke away from when it left. And you can see it just here, right there. As a matter of fact, if we enable the accumulation and extended range bars, we set this to, let's say, 1000. We'll probably see some nice candle structures here. Yes, you can see that we have the parent, we have a micro child just up here, and price actually reacted to that. So the bottom of the child right there. Oh, actually it went just below. So it went back to the lows here. So that's where it went to. This accumulation candle, which is at the base of this price structure here. Here we have the parent, price left, it came up, it tested the parent, then it dumped away. We have all these green candles, which tells us that there's a really good acceleration as price left. Then price came back to the source of this move, which is this area of supply at the top here. Yeah, and so the cool thing about the rectangle tool is it enables you to find these areas very, very quickly and be mindful of, for example, the weekly area here and the daily, even when being on the 1 hour or even the 1 minute chart. So that's pretty handy, I think. Okay, so now I think we've pretty much covered the software. Does anyone have any questions about the software? I want to, before we wrap this up, I've already been rambling for 1 hour. I want to do like a top-down analysis of a pair, and then we can kind of finish off at that. Robert is asking, he says, I have the text version of the currency strength. How do I obtain the GFX version? Well, you can obtain the GFX version in the downloads here. You can see that we have, if you go to the license page on the website, and you'll see it just here at the top. Here you have the text version, and here we have the GFX version here. Is that all right? And then you'll need a password to unlock the zips, and I'll just send me an email and I'll send that to you. The reason I know the passwords are a pain, but the reason I put passwords on them is because I had a bunch of dishonest souls subscribing to the website, downloading the software, and then unsubscribing within the same minute, and it was a pain. And so I had people being naughty, so I just did that to prevent that. I know it's a bit of a pain, and I apologize for the extra step, but if you have any issues with it, please let me know and I'll be on it immediately. Okay, but that's where you get that. Okay, so now we're going to do a top-down analysis, which was the next point on my slide. And does anyone here have, my pleasure, Robert, does anyone here have a pair they want to look at? We can have a look at anything. I can also grab something. Let's have a look. And no one says anything? Okay, I'll grab something. Let's have a look. Look at the pound, maybe. Let's have a look at the pound. I think the pound looks pretty good. Okay, so what we have here is that we have, I like to go on the higher time frames on the monthly chart. You can see on the monthly chart, price is really low. Price has never been this low before. You can see price stopped here at the bottom, and we saw price stopped and price rallied a bit, and now it came down again. So we're probably reacting at an area of demand within this candle here. But keep in mind, on the monthly time frame, we are in a very strong downtrend. If you go to the weekly chart, what do we have? Well, we just spoke about these trend lines, and what does this tell us about the trend currently? Well, before this candle, if this from this candle and to the right did not exist, we'd be in a downtrend. But now price has actually broken the trend line, and what does that do? Well, that qualifies this area of demand as demand, and this is exactly to the pip where price came to. See, price stopped on it, it didn't get to it quite, and then price poked into it, and now we're having a nice rejection, and we would almost have been up a 1-to-1 on that one there. But you don't have to take that one, because we're on the weekly chart. Nothing is certain, and we don't even know if price is going to continue moving higher or if it's going to have another attempt at moving into this area of demand. If we look at this for just 1 second, you can see that we have this wick to the right, and what does that tell us? That tells us a lot. That tells us that we have the parent here, and this is the child. So we had actually 2 attempts at testing the parent before price is rejected. Then this is actually a test of this child just here. So if we, just for a quick moment, go down here, we're going to mark off the low just there. We're going to look inside this wick and see what's going on. So we'll go to the 4-hour chart to do that. We're going to have a look. You can see that, and you can see there's something going on there. You can see in this wick we have the wick again. Price tested it once, twice, and there's a, what is it? That's the 120.87 area. So in this wick again, we have something that we have to look closer at. We have it. It's again. This is the Brexit. I don't know if I'm going to have enough historical data. No, we can't see it. This is going to be, I don't think we're going to be able to get any clarity, but there's something in this wick that price is reacting at. And we had a really nice test of it there. We had another test of it there, and then price managed to move higher and hold away. So if we go back to the weekly chart, you can see that we have this low here, which would be a pretty nice trade because it would enable us to put our entry here, and the stop would go down here, and that would enable us to have enormous protection for our stop. But currently, price is reacting nicely at this area of weekly demand just here. But if we have a look here again, you can see that we have this area of demand. We're going to take the whole wick here because we have a pretty big wick, and price came down here, which overlaps very, very nicely with the area, sort of the edge of this weekly demand. That's nice. And then we have this area just up here, and this is good because this is the first area of supply after the break of the trend line. So ideally, we look at this, we have this one here, which has been tested, almost taken out. So we had a test, price reacted at the child. So we'll actually just move this because this is the one that's currently holding. We'll move it like that. Then price is moving lower. And so this one here, this child just here is the one that broke the trend line. And this is the first one that happened after the break of the trend line. So we'll mark this one off like so. But we didn't have a really nice clean breakaway. We didn't have a green candle leaving this area. So I would be a little bit careful about trading that one because I think we'll find that price will probably manage to feed into that. Also keep in mind that we are reacting to a weekly demand, and weekly demand is stronger than daily's demand. So the order flows accumulated to push price higher from this area are likely bigger than those available, the liquidity available here to hold price. So I'm thinking that price will probably move through this and eventually come up to the parent, sorry, this child that caused the break of the trend line. So I'm thinking that a short from around this area here would be definitely in order. But before we get ahead of ourselves, we can remember that we are reacting a weekly demand, so what's saying that we can't buy for the time being. And you can see that we had this trend line break. We had a high, low, lower high, lower low, and this area of demand broke the trend line. And so this would be a marvelous place, to look to buy just here. And you could put your stop below here, pretty small stop, or you could perhaps be a little bit more careful, and you could put your stop below here into this weekly, this whopping weekly area of demand, which I think would be pretty nice. But I think that we're probably going to get a reaction there big enough to get the risk out. And so I think it'd be definitely worth having a go at buying at the 122.43. But when I say this, keep in mind that if we have NFP data being delivered at the time the price is getting close to your entry, absolutely positively pull the trade, because when this happens, liquidity dries up and our supply and demand theory is temporarily put on hold, because these big institutional traders are often pulling their orders before the big news events hit the road. So just keep that in mind. And so here, we started on the weekly chart. We identified a weekly area of demand. We went down to the daily. We found some areas of supply that we could consider to trade at. We've qualified this one because it broke this trend line. Also, fundamentally, interest rates were just increased on the American dollar. We have the Brexit. So fundamentally, this pair should be moving lower. And on the 4-hour chart, we have identified a trend line break, which lines up nicely with this weekly area of demand. So I'm thinking if price comes down here, we could have a nice shorter term buy, and you want to be reducing risk once price kind of manages to wriggle back up into this body here. And then when price gets up to this daily supply here, it's not a pretty one. You could probably refine it and move the bottom of the area about around here. Then you want to be out of the trade by the time price gets up here, because we're also getting close to the big figure. If it does hold, then we have this area of accumulation up here, and then we have this child, the parent being up here, that we could look to scale out at as price moves up into that area. Okay, we're already up 1 hour and 12 minutes, and this being the first symposium, I think I'll kind of leave it at that for the time being. Does anyone have any questions about anything I've said, or has any comments? Is it top down? Is it useful? Is it interesting? Is there something I'm leaving out that's unclear? Robert says, very informative. Thank you. It's a great pleasure. I'm sorry, sometimes I'm a bit of a supply and demand nerd, and I really kind of go off on a tangent now and again, and I try to remind myself, but if I do forget, please, I will not be insulted if you kind of put your finger in my ribs. Even as saying would like to see a lot more top-down setups. Absolutely, I'll be doing this every single time we do these, every single time. And as a matter of fact, what I'll do is I'll spend the first portion of the symposium discussing a specific topic. It could be supply and demand, or it could be psychology. And then the last half of the session, then we'll be doing trade analysis, and we'll be looking at very, very concrete trade setups that you can look at. And a lot of these trades I take myself. I take some on live accounts. I take some on demo accounts. And so it's at your discretion if you take these on yourself. But if you're putting these on your real account, please do so at your own discretion. Don't take my word for it. But just for just fun, we have in the Coach's Corner. I also do a lot of analysis in the Coach's Corner, and so we talk through a lot of these setups in the Coach's Corner, and we have an account that we look at there, and I'll just log on to that quick. And then we've been doing this for a few months, and the account is up about 12, just over 12%, which is really nice. So we haven't had a loss yet, which is great. We absolutely positively will have one, but it's just to show you what it's all about. Let's have a look. We're going to have a quick look at this. We have a look at some of these trades. We have this one here. This is a trade that we took. So we sold here. This was interesting because I sold here, then price went up, and this is actually, and I wanted to sell here because I was only looking at this one here, and I thought price will likely come up to the 35.61 and go down, and it did, but it also went up above this and into the parent, which is over here to the left, which is again the lesson on the parent. And I got this trade. I watched it get filled when I was in bed. Logged on in the morning. I had a look, and I was a bit like, damn it, there it is again. And so every time I trade a child, I have to live with this drawdown, psychological drawdown. Price comes up, it gets close to the stop, gets pretty close to it, and then finally it moves down. Had I taken this one, and if we go to left, you'll see where it is. You can see it's right here. It's this area of supply that it did. That it went to the top of this area of supply. Then things would have been a little bit easier. And in this wick here, there's a 1 hour area of supply which price reacted on. And that's what capped price. Again, we're getting very close to the big figure, which is interesting. And yeah, and that's what happened. Price came down to here. My initial target was just below here, which would have been hit, but I took it off because it was right up to Christmas, and I just wanted to get it out. You never know what's going to happen when price is moving around at the just before the holidays. The market thins up, and so that could have been a bit of a blow. But we don't trade a lot on this account. We've had like 5 trades maybe, but we had, on the first month we did it, we had 2 trades and we were up 9.5%. So this just goes to show that you don't have to trade a lot to earn money. I would rather wait, sit on my hands, and look for the super nice trades and take those instead of kind of trading mess like this. You just look for the really, really nice setups. We have something clear here. We have something clear here. We had something clear at the top. So just wait for those, and I think everything should be really good. Excellent. Well, excellent, Christian. I'm really pleased that you find this useful. Good. Well, yeah, but like I said, we'll be doing a lot of these, and we'll be going over live trades that I've taken. If you guys want to look at trades that you've taken, you're also welcome to send those in. I'll just show another one quickly before I log off. I sold the euro here. Here, just before the holiday. Got a really nice fill. There's only a few pips of drawdown. Where did I get filled? Where was it? I think it was at lows here, around here anyway. I got filled, and I took it off just in here. And again, it was kind of before the holidays, and I was a little bit right in the middle of the holidays, and I was a bit like, liquidity's going to thin up, so I just pulled it off, and price kept going lower. And that'll happen, but you know what? The time that you think, okay, this is the time that price is going to keep going, that's going to be the time that price is going to come up and stop you out. So treat every situation regarding the news as if price market's out to get you and it's going to stop you out, because it probably will. Just think, always trade defensively without getting silly with managing your stops. But if the news is coming out, take the trade off, take the order out. If you're in a good trade or a bad trade and there's a holiday about to start, take the trade off unless you're okay with taking a full stop and potentially a bit of slippage. Just be a little bit careful. Be very, very careful, especially when the market enters illiquid times of the year, which is definitely around news and around the holidays. Excellent. Good. Well, I think I'll wrap it up at that. If no one has any more questions, I think we'll be done with that. I'll take this recording, I'll clip it up, and I'll put it in the member section, and I'm going to replace the weekly trade examples with these weekly symposiums, and then I think that they'll be a little bit more interesting because it's a little bit more interactive and should provide a little bit more value for everybody. Good. Well, thank you everyone for being here. Thanks even so much for checking in with us. I know it's really late there in Australia, but I really appreciate you being here. And next time, if you're not able to make it because it's so late, that's completely fine. This will definitely be recorded for you. Good stuff. All right. Well, I wish everyone a super duper day, a happy 2017, and we will catch you again next week. Thanks for watching.